guys, welcome back to this Money Control live stream. I am Kandita Khemka and I have with me my colleague here.
Hello there, I'm Yatin Mota and today we have the 8th wonder of the world with us, Nandita Khemka, back from her holiday, back to closing bell. Nandita, good to have you on the show, and when you're not there, we had serious market volatility. But
serious
I think,
market fall, but then the markets got a whiff that I'm coming back, which is why we saw a rebound. And even today we saw a very strong rebound, Yatin, which by the way fizzled out. The RBI-led cheer that we saw in the first half, completely fizzled out towards the second half of the session. I think, investors and traders used this bounce to book some profits, which is why I think we saw the Nifty falling below that 25,000 mark. But yeah, it feels good to be called the 8th wonder of the world. Yatin, thanks a lot for the compliment. I take it as a compliment. But let's talk about the markets because there was quite a bit of a change in complexion from the first half. Of course, mid and small caps continue to outperform the benchmarks. Yesterday as well, Yatin, although we saw a rally across the board, the Nifty Midcap index had managed to outperform. And today as well, almost 1% kind of gains on the Nifty Midcap index and small cap index rallying in excess of 1%. And we saw a good breadth, 2:1, that was the market breadth. And the bad part or the sad part is that the Nifty Bank index also came off its day's high. We saw a very good up move, 51,700 being crossed intraday. But the stance change by RBI clearly was well received. But of course, some profit taking coming in the second half of the session. What clearly dragged was, aside of the Nifty Bank index, was the FMCG pack, Yatin. Big drag. All the heavyweights like ITC, HUL, Nestle were among the laggards, and energy pack was the other one that was under pressure. Although crude slumped somewhere around 5% overnight yesterday. Quickly talk about some of the other sectors that were outperforming. Pharma, realty, autos, these were the stars for today. And even metals, Yatin, after being the sole laggard yesterday, it saw a good comeback today. Not very big gains coming in, but ending the day in the green. In terms of individual movers, Yatin, on the gainers end, you had recent end Trent doing well. Cipla top Nifty gainer, Tata Motors, SBI as well, Yatin, managed to clock in gains of 2% or so. Tech Mahindra, mind you, TCS also in focus. Tomorrow numbers are coming out, so quarterly earnings kick-starting tomorrow. On the losing end, as I mentioned, ITC, Nestle, but heavyweight Reliance Industries was among the drags today. ONGC, Britannia, L&T were the other laggards. But Yatin, quite a few news-driven movers in the mid-cap end of the markets. Rights saw a good surge.
Yeah, good surge. And Nandita, despite the market being slightly sideways to ending the day lower, we had the market breadth which supported. The market breadth till the end of the day was almost 2:1. So 2 gainers for every 1 decline. So clearly the mid-cap end of the market was doing better. Some select stocks were doing better. So except for the index heavyweights, I think the overall market mood was positive. In fact, real estate, pharma, as you mentioned, were the top gainers. If you look at REITs, that stock moved 8% after they got an order from UAE Railways. I think the Middle East corridor and the trade between India and UAE is something which required railway infrastructure, and REITs getting that particular big chunk of order. Probably the reason why the stock moved 8% in trade. CDSL obviously made 8% gains today after NSDL got an SEBI green light for its IPO. So last 2 days have been great, in particular for CDSL. Divi's Lab also moving by 8%. What did not do well, Idea continues to be a laggard stock trading near that 9 rupees mark. ITC witnessing some profit taking. AU Bank, Sobha Developers, be it BSE, all of these stocks witnessing some bit of profit taking. But yes, stocks like Torrent Power, Glenmark, Cipla, Trent, MCX, Naukri, Infosys continue to trade at new 52-week high for the trading session.
Right, quite a few movers and shakers, but very briefly, just to take you through what happened in the RBI policy today. Of course, 10th straight time of repo rates being maintained at 6.5%, but the script changed quite dramatically, given the fact that we saw a change in stance, Yatin, from withdrawal of accommodation to neutral. We've been waiting for this for a few policies, but this happened, and it did come as music to the ears for the markets. Of course, because quite a few bad news being digested by the markets in the last one and a half weeks. So that gave way to good optimism, but of course it fizzled out. But in terms of inflation and growth forecasts, they have been retained, which also came as a sigh of relief because growth has been moderating, but still RBI has maintained it at 7.2%, and inflation as well. Food inflation remains sticky, although it has come off slightly due to base effect, but there are chances of September inflation coming in higher, which has been pointed out by the governor. But the governor didn't really use elephant this time around. He used horse, and he said that horse has been brought back to the stable, and it is within the tolerance band. But of course, you have to be careful about not opening the gate too soon. Of course, these two animals are used during wartime, right? Historically, which is why he used this term. But of course, MPC also had 3 new external members. One of the members had voted for a 25 basis point rate cut. So that's also something that's different this time around. But there has been a stark warning coming in for NBFCs, Yatin. At first I thought that perhaps there will be a knee-jerk reaction on NBFC stocks. That hasn't happened, because experts say that the NBFCs in the listed, smaller ones in the unlisted space will get more impacted, and the larger ones will gain market share as a result of that. So they believe that the listed NBFC space actually stands to benefit, but we have to see what kind of action RBI really takes against some of these MFIs and HFCs, which according to the governor have been growing more on the basis of targets rather than actuals. But Yatin, on that note, let's quickly take a look at all the stocks that are on our radar. Starting with Divi's, you mentioned the stock was up 8%. Of course, we have a new initiation on the stock by Citi. It has initiated coverage with a buy rating, and the target price is at 6,400, the highest target on the street, 15% potential upside from yesterday's close price, and the only target that's beyond the level of 6,000 rupees. Now, Citi has written in its note that as innovators are looking to de-risk their supply chain out of China, Divi's has managed to secure a place in the GLP, glucagon-like peptide 1 APIs. Now, these are used in the treatment of diabetes and obesity right? And due to the growing prevalence of these two diseases, GLP-1 is in demand. And now with Divi's securing a place here, that means it will be lucrative for the company. And of course, it could translate into an opportunity worth, I think, $800 million, if I'm not mistaken, for the company by 2030, which is why they have initiated coverage. And the brokerage also in fact says that the company will be a key beneficiary of the supply chain diversification trend as innovators are placing more confidence in the company. And this is also reflected in the new names that the company has added in the custom synthesis business. The EBITDA estimates for FY26 and FY27 are 3 and 12% higher than consensus, and that's driven by GLP-1 and the new products in the custom synthesis segments. Now, failure to scale up in custom synthesis is a big risk according to the brokerage, and the bear case target has been placed at 5,100 rupees per share. 28 analysts covering the stock, Yatin. I think 9 of them have a buy rating and 13 still have a sell rating, and the stock, since it has exited Nifty, Yatin, is up almost 11% or so.
Absolutely, and typically we see this phenomenon that the stock which is out of Nifty tries to consolidate for a few weeks before and after the Nifty rejig, and then tries to move higher. And with the Citi initiation, I think the stock got a right move of almost 8% in trade. But moving from pharmaceuticals to AMCs, and with markets at record levels, asset managers will probably benefit. Today we have a Nomura note coming in on asset management companies and mutual funds, which is HDFC AMC, wherein they have initiated a buy call with a target of 5,000. They also like Nippon AMC with a target of 785. Here also they have a buy call. However, they have initiated a hold rating or a neutral call on UTI AMC with a target of 1,300. Now, Nomura believes that asset management companies will benefit from the bull market and overall, financialization of savings. We have seen that from fixed deposits, a lot of people are moving to SIPs as well as investments in mutual funds. Clearly, asset managers will benefit given the fact that they make money on the AUM. Also, when it comes to the AUM, which is asset under management, Nomura believes that an 18% CAGR will likely happen till FY30, led by growth in equity as well as passive segment investments by individuals as well as from the market participants. Also, if you look at the ETFs, that will be continuing to grow as a segment for corporate as well as institutional flows. So ETF is also one product which is getting much awaited attention from the institutional side, which will benefit the AMC companies. So in all, when the market is buoyant, probably AMC companies will benefit to gain, and the biggest statement here in the report is financialization of savings. This is something which will keep the earnings growth as well as the AUM momentum going for these asset managers.
That's true, Yatin. And I was asking our experts also when I was talking to them during the RBI or post the RBI policy outcome as to what they think or where they think the markets will end the year. and both of them took a bet of 26,000 to 26,500. So although there is a lot of gloom in terms of what's happening in West Asia, but of course, brokerages are putting their faith in the long-term story for India, and which is why I think 26 and a half is where the market could end the year, and of course, financialization of savings will be a big thing going forward. But very quickly, the other stock on my list is Senco Gold, sparkling today, of course, on the back of a robust, quarterly update. I just want to point out the retail growth was up somewhere around 27% on a YY basis. Same store sales growth rose 20% in Q2 on a QOQ basis. Yatin, if you see, it's a good expansion because in Q1 it was just 4%. So that's marked improvement in the same store sales growth, and the strong growth in the second quarter is amid the consistent increase in gold prices. Of course, gold prices had been hitting record levels. Of course, off late they have been correcting, but good monsoon in eastern India also acted as a tailwind for the company, and contributed to robust growth in tier 3 and tier 4 cities. And the custom duty of reduction in the union budget also bode well for most of these jewelry makers, and we saw that reflecting in stock prices as well. The company had also highlighted that the high growth momentum till the first fortnight of the quarter was impacted by gold crossing 2,680 per ounce in the international market. Also, there was the Shraddh season, right, end of September, so that also impacted. But the company has guided that it will be launching somewhere around 18 to 20 jewelry showrooms in this year, and out of those 10 to 12 will be franchisee locations, and they've already opened 8 showrooms in the first half of FY25. But the pipeline for both owned stores and the franchisee stores are pretty strong for the company, and it is also well positioned to meet its annual target in terms of showroom openings, and it's also on track for 18 to 20% YOY growth, revenue growth in FY25. There is a festive season right now, Durga Puja, there's Diwali, so the company of course will benefit from all that, and a lot of action around the stock itself, right? There's recently been a stock split announcement, and there's been a board approval for fundraise, right, through QIP as well. So the stock has been doing well amid all this, and even other jewelry companies like Titan, Kalyan Jewelers gave very strong quarterly updates as well, right? So looking at the stock performance, Yatin, in the last 1 year it has doubled, and since IPO price of 317 or thereabouts, the stock is up almost 350%. So already a multi-bagger.
Absolutely, and Trent also, that is one stock which moved higher because they have started giving, the artificial diamonds or the green diamonds as we call them. They want to really, scale up that business as well because, as we move forward, probably a ring which is 1 carat real diamond costs, in lakhs of rupees. And you have here a product which is a green diamond or a artificial diamond which is really doing well, lab grown diamonds as they call it. I think this is one segment of the jewelry space which is keenly to be watched for because a lot of excitement around the cheaper side or the value side of this segment. Obviously studded segment is one bread and butter area for all of these companies because the core margins really get a positive impact because as you grow your diamond sales, the typical margin move up. Whether or not companies like Senco Gold or Titan get impacted with lab grown diamonds as a competitor, or whether or not they introduce this business segment at their showrooms itself is to be watched out for in the near future.
So for Trent at least, diamonds are clearly turning out to be the best friends, right?
Yeah.
But then I think with that we are completely timed out on this edition of Closing Bell. Of course, we have reversed all the gains that we saw today, but let's hope tomorrow we see some buying emerge as well. But with that, from Yatin and me, thanks a lot for tuning in. Stay tuned to Money Control for all your other news.